Hello everyone and welcome back to of the Market Outlook. I am Kavita Agrawal, the founder of EXP-Invest, and like every week, we are here to talk about what has happened in Nifty and also do the intersector to talk about what has happened in Nifty and also do the intersector chart analysis. We will go one time frame higher at a time, one at a time, to identify the most important levels to look out for in the forward-looking analysis for the weeks to come by, and we'll also identify the levels which have played a very important. And then lastly, we will end with the intersector analysis of the charts, because it's very important to know which sector is in momentum, which is coming into momentum, which is going out of momentum, so that we can place our swing trading bets very optimally. After all, swing trading is the most efficient way of participating in the market. That's my personal opinion. All right, let's share the chart with you. That's Nifty, and there's the screen. All right, so this is my layout. I'm going to change it to full screen really quickly for you. And this is the 3-minute time frame with which we start our chart analysis. Now, what are we seeing? What happened this week? So this week started somewhere here, and we can see that the uptrend in Nifty had started from the Wednesday of last week. Now, if you attended the market outlook session of last Friday, you saw that I had mentioned there was a strong support at the level of 19,500, 19,600, right? Now, what happened on Monday was, on Monday we opened with a big negative sentiment that war has started in Israel. As a result of that, the gap down opening which we experienced, what that gap down opening basically did was it did a huge sentimental play on the participants, especially Indian traders. A lot of people started messaging me if the market was going to crash because of this. I think the only impact the war really had on the market was that this correction, which it was anyway due to take, might have taken in a 1 or 2 day period. It just took that instantly with the opening itself. And it did not breach below the important support which had been identified. So now that 19,500 has acted as a very important support, what is the next important support and what is the next important target? So after Monday, we can see that the market rallied pretty well Tuesday, and then Wednesday it started plateauing. So Wednesday and Thursday it stayed in a bit of a sideways or a choppy kind of momentum. Before closing on Thursday, it broke below the 200 EMA of the 3-minute time frame, and today it gave a strong gap down opening again due to negative sentiments, but it recovered pretty well. So today was actually a pretty volatile market because the market opened lower, went up, went down, again went up, again went down. So I hope the options trader are fine. I mean, this technically should have been a really, really good day for intraday options trader. So if you did not make money today, then I would suggest you really rethink your strategy and maybe, come into my team. I'm the swing trading team, right? Okay. So what I can see here is that the market has definitely moved to the positive range shift on the 15-minute time frame, which is good news. Here I can clearly see that the prices, the price of Nifty is taking good support at the 200 EMA on the 75-minute time frame and the 15-minute time frame actually, right? So the 200 EMA of the 15 and the 75-minute time frame have kind of merged here, and they're both lending support to the price, which is really good considering how much time the Nifty had spent. Let me pull out my drawing tool. Had spent below the 200 EMA of the 15-minute time frame. It's very natural that the Nifty came down today to retest the same. My expectation is that the market is still very bullish, and the prices we saw that price almost came back to the level of 30 on the 15-minute time frame, did not really touch it, but it did give a double retest of the 15-minute time frame's 200 EMA. So the 15-minute time frame is looking quite bullish. Let's talk about the 75-minute time frame. So what I see on the 75-minute time frame, that it never really became bearish at all, because what I can see is that the 75-minute time frame has been in the bullish range shift, and this correction that we experienced, right, from the peak of 20,000 all the way to 19,500, a mere 3.5%. This was nothing more than a breather, which is very normal for the markets to take, right? In fact, this correction was very well predicted in the market outlook series, and so was this rally which has ensued. So my expectation is here also we saw that when the bullish range had set in into the 75-minute time frame of Nifty, there was a period of some resistance at the level of 60 before a breakout happened. But even during that, the upside continued to go on. So I am expecting a similar movement here as well, that the market will keep nudging. So what is the target to expect in Nifty? Let's go to the daily time frame. So my personal target in Nifty is 20,600 first and then 20,900 second. Okay, there is nothing to really see on the daily time frame because the daily time frame suggests that it's very, very bullish. The volume profile is singing very bullish tunes. We can see that in the volume MACD, because the volume in the constituent stocks of Nifty has been increasing when the trend was bullish, has been declining when the trend was down. This has been happening for quite a few swings now. So we have no reason to expect that the market is not going to continue to stay bullish. So that was the Nifty analysis. Now I'm going to move on to the Bank Nifty analysis, but one note for all of you. Once I'm done analyzing the Bank Nifty and the intersector chart analysis, I am going to take some time to answer your questions. So if there are stocks in your portfolio, my friends, which are deep in red, it is always better to rip the band-aid off, get out of that, experience, book your losses, and then start afresh. You can't undo a mistake. You can learn from it, and then you can start your journey afresh, and you can do better next time. So if you've made a mistake and you've let a loser stock sustain in your portfolio, it's killing your portfolio, it's killing your capital. Drop the name, drop the cost price. I will do an objective analysis for you, and I will tell you whether you should add more of that stock to average it down, whether you should hold, and whether you should exit, depending on the forward-looking analysis. Okay, so start putting down the name and the cost of your stocks, because if you wait for it too long, then I might get out of time and I might not be able to help you out. Now, 3-minute time frame of Bank Nifty, and what have we got here? All right, so last time when we analyzed, we saw that Bank Nifty had breached this level, right? Breached the 30 level. So we did expect a retest of this bottom, which happened beautifully. 43,880. Okay, and then we saw Bank Nifty go up. But what did Bank Nifty do on the way up? It breached the previous high, which means it forged a higher high. What is higher high? It is the bare minimum, the bare basic definition of a bull trend. So we can safely say that the bull trend is back in Bank Nifty because it's forged a higher high. It is yet to forge a higher low. So we can confirm the higher low. So one thing is that it did not forge a lower low. Okay, it still needs to forge a higher low to establish this fresh leg of rally, and that we can establish once the price goes above the level of 44,700. So that's the first resistance for Bank Nifty. 44,700 also establishes itself again because there is this blue color line, which is the 200 EMA of the 75-minute time frame superimposed on the 15-minute time frame, is also hanging out around there. 44,600, 44,700. 100 points don't really matter when we are talking about a price of 44,000, right? So that is the main resistance level. Let me just mark it. So Bank Nifty going and trading above that is very, very good news. But the problem is that this entire zone is actually strong resistance for Bank Nifty for a lot of reasons. So once Bank Nifty can break out above the level of 45,000, it's a lot better for it. what I can see is that even though Bank Nifty has declined, it has already made the shift to the bullish range on the 15-minute time frame, which is an early indicator of resumption of bull trend. 75-minute time frame. So the 75-minute time frame is giving us no reason to worry. It says the bull trend never went anywhere. I was just taking a breather, and we can expect the uptrend to again resume. But how far do we expect? I honestly feel like above the resistance of 45,000, 46,300 is a very, very important resistance. So that is a level that you will have to look out for. And my target on Bank Nifty is 47,350. With that being said, there's not really much to analyze. There's nothing different happening on the daily time frame. The daily time frame does show us a very clear indication of a negative divergence, not a very strong negative divergence, but one nonetheless. It is important to observe whether the Bank Nifty crosses above the level of 46,200 or not. May not be very easy. I think it is more likely that Nifty will achieve the target of 20,600, but banks maybe not. I don't think banks are the best sector to make fresh positions in. I think they are showing what is called an exhaustion of rally. So they may be in the last leg of rally, which is the most difficult part of the rally or the impulse wave to, trade in. So if you are a momentum trader or a swing trader like I am, then trust me, you always want to be in, you always want to hold positions in stocks where the rally is fresh, where the rally is new, where a new impulse wave is starting, because gives you the opportunity to make sure that you're able to trade multiple times with lesser effort and more profits, more income. Okay, so this is basically the principle with it, which I trade for my accounts, my client accounts, and give recommendations, trading recommendations to my members of the Trade Together program. If you want to know more about that, the best way to connect with me, talk to me, and understand whether Trade Together program is a good fit for you or not is to join my Telegram channel. It is super simple. You can simply open this link in your browser, or if you have Telegram downloaded, just go to the search with Kavita. As I said, Kavita is my name. Enter and you get directed to the Telegram channel. So just add this and then leave a comment on any of the posts that you see, and I'll be able to see that message, and I promise I will reach out to you. We'll schedule a call, get on a call, and more than happy to help you out. Alternatively, there is also a link posted by the ET moderator. There's also a link posted by the ET moderator, which you can click on, and you can also book a consultation call with me. And I'll be more than happy to help you out with your portfolio needs. All right. Now with this, let's move on to the indices chart. So I'm going to pull out my indices layout. Yes, it's a separate layout that I maintain, which basically plots the CNX 500 chart on the 15-minute time frame, to which I have added, or for comparison, other symbols. What are these other symbols? All the listed indices on, NSE. So if you also want to create this chart, just plot the line chart of CNX 500, click on this plus button right beside the name, and just start typing the name of these indicators that, sorry, not indicators, these indices that you can see. And once you do that, just make sure that, the colors are not too similar, and you've got this. And this, the name of the days, this was a Pine script thing, and trust me, I cannot explain it. I don't know how I did it once, but I don't think I can do it again. It was too much for me. I'm not a coder. Yeah. So let's see what the market has done since the opening on Monday. Actually, let's look at it from Wednesday, because Wednesday is when we actually saw the market bottom, sort of, started to rally. So what I can see is that since Wednesday onwards, the biggest winner has been CNX Realty. Wow, it's been up almost 6% this week, which is fabulous. Realty sector is a sector where I personally was not very bullish from, if I'm remembering correctly, a few weeks back. Realty and infra was not very bullish, but we can see it has rallied quite a bit. Well, good for those who were holding. PSU banks has taken a massive beating, so I've been warning you guys against holding positions in PSU banks, and we can see that's been like the biggest loser this week. So I can see healthcare and CNX Pharma are also a little bit down, which Pharma and healthcare did really, really well. Okay. But the longer term trend is still quite bullish in pharma and healthcare. However, for swing trading, it may not be a good sector to enter into right now. However, there are a few stocks which have started to move pretty well. I am particularly bullish about on the consumer durable sector. I've been saying this for a few weeks. I think the whole sector is taking a little bit longer than I expected to turn around, but I'm still pretty positive that it will. In fact, I have a huge holding in Bajaj Consumers in the portfolios that I manage, and that is one of the biggest winners in my portfolio right now. IT stocks. So you have to be a little careful in IT stocks. People are very eager to purchase the IT sector, but I think there is a little bit more pain left there. So don't be very eager to, purchase IT stocks just yet. Finance sector has done, CNX finance sector, oh my God, it has done so well. And I expect that rally to continue for a bit longer. I also in the energy sector, so keep an eye out there. I don't have an opinion on PSE. I am bullish on FMCG and consumption as well as auto, but auto would not be my first preference when it comes to making bullish bets. Now that I'm done with, it's finally time to start analyzing the comments. So I'm going to switch my screen. I'm going to look at your comments, and I will try to help you the best to my ability. All right, let's see. We don't have any comments on YouTube, so we will shift to Economic Times. Lots of comments there. I see Neeraj has a question, which sector is trending? So Neeraj, I have already Bhaskar and okay. Wow, today Bhaskar and Mahesh has beaten the ET moderator in sending the messages. I love it. All right, let's see. Mahesh has a question first. He's asking about SJVN and BEL. Okay, SJV and 73.2. Let's take, oops, oh no, wrong layout. I'm gonna reset this, and this is SJVN, and I need to go full screen on this. There you go. All right, let's start with a slightly bigger time frame of SJVN, and I can see there's a super bullish run going on with superb volumes. There is no reason why you should absolutely exit SJVN. Just keep holding on to it. It's a wonderful company, wonderful stock. I think you should maintain, however, a stop loss at the level of 67, and it's very hard to give a target for this company, but you should definitely keep holding. That being said, I would not recommend anyone to make a fresh entry, because if you did, you might get stuck at the top. Plus, you always have to worry about the risk reward ratio, not the potential target percentage, the risk reward ratio. To how much risk do I have to take in order to experience that potential reward? Because remember, the reward is always potential, but the risk is always very, very real. So always, whenever you see any stock idea and you're tempted, always ask, what is my risk reward ratio, and can I set a stop loss on this? If you're using a broker which does not offer stop loss positional stop loss services, I would really recommend you to switch to Zerodha. All right, let's move on. So you also have a question on BEL. So no, BEL is not good for buying. Neither is SJVN good for fresh purchasing. My personal opinion on BEL is that it's already hit its target of 145, and it started to give something called a negative range shift. So I think you should get out of BEL if you are holding it, because it's a super cyclical stock, and you can see my drawing and you can see what I am suggesting in the stock right now. I think it's headed for a massive decline. However, if the stock gives you a strong breakout above the level of 180, then it can be reconsidered, but I think that's very unlikely, because if you look at the volume has started to decline. It's no longer increasing. So please be very cautious. Use your stop loss. Why do we use stop loss? Because we love our capital and we acknowledge that, we earned that work and we don't want to lose it. So now we come to the request by Mr. Bhaskar, Deepak Fertilizer. Deepak Fertilizer is looking really, really good. So I am very bullish on the chemical sector, by the way. And Deepak Fertilizer is one of the stocks, okay? And what I can see is that Deepak Fertilizer had started giving a bit of a sideways consolidation, but that was the reason why I basically got out of this stock. I am waiting 6-8, and once that happens, right? Once that happens is when I expect to re-enter the stock for a bigger target of 1100 plus, with a pretty long holding period. The underlying trend is really strong in Deepak Fertilizer.